The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 15th, the terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Would love to hear from you at 877-927-6648. Now, if you can't call in, but you've got a question, you can always send me an email. Send that to Steve at TFNN.com inside the subject heading. If you'd be kind enough to put radio show question. Of course, if you're inside our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. First, look, for all of you in the den, my apology. I'm not sure why you are not seeing my chart out there. I'll do the best I can to try to get that rectified during the breakout there. I'm not really sure, but I believe it is showing on Tiger TV. So I'll just simply ask during this first segment, to at least go ahead and put on Tiger TV. I know in the production room you guys are saying that they can see it in the den, but look at the comments in the den. Everybody says no, that's not the case. So we'll try to get that figured out. In the meantime, we do have all the U.S. indices trading to the downside, all the sectors inside the S&P 500 trading to the downside. So the Dow is off 715, the S&P is down 95. NASDAQ 100 off 354. Russell's down 37. Semis are off 93. So it's not on YouTube either, Rich. My apology for that. I'm not really sure what to do during the live segment here. So you're just going to have to bear with me through 5 minutes. I will do everything I can here to try to describe what's going on, or at least what it is that I'm seeing. So unfortunately, you can't see the charts. But what you can do is, for those of you that simply showing on Tiger TV, perfect. Okay. Great. So if we take a look at the set of charts that we're looking at here, the 4 daily equity future contracts. What the heck? You do not have permission to speak in this channel. Oh, that's weird. No idea what that was. What I've drawn in here, you'll see 4 different rectangles. Those rectangles basically identifying the consolidation trading range that prices has been trading in. Now, we won't know till day's end whether or not it's going to continue to stay in this consolidation or whether it's going to break it. Now, the interesting thing about a consolidation pattern, let's take a look at the ES Mini. And so I would say that what I'm looking at would be a close below 39.45.50 is a pretty decent indication that we've got a break of a consolidation. Now, you need 2 consecutive closes below that. But all I'm going to do here is I'm just simply going to take that ES Mini consolidation. I'm going to copy it, and I'm going to paste it. And now what I'm going to do is just simply move that down to the bottom. Because if this is a consolidation measured move, the move should be equal to or greater than that consolidation pattern, which would take us down basically into the swing point area from November the 3rd. So that's down to the, around the 37, 35 type area. We can do the same exact thing here for the NQ, for the Russell 2000, and for the Dow. We don't need to go through that exercise out here, but that's what you would do. That would be one way to take a look at the markets. So that's one thing that is going on inside the markets. What else do we have going on inside the markets? Well, we know that 3 of the 4, and I've got to find this set of charts out here, 3 of the 4, here's the cash indices. So we'll take a look at those versus the futures. These are the weekly time frames. 3 of the 4, I know I've said that 3 times now. Let me say it one more time. 3 of the 4, meaning the S&P, the NASDAQ 100, and the Russell 2000, each have made its way up to the top of their descending price channels. These are the bearish directional price channels that are still in play out here. It is not so much in play for the Dow. The reason it's not in place for the Dow is because price broke out of it. Just an indication to you and I, one more indication that global capital is parking its assets. I caught you there. Parking its assets into the large cap equities out there. That's not what we've got going on inside the S&P, the NASDAQ 100, or the Russell. So we've got measured moves that could take us to the. And we gave you a price. We gave you a price objective. But remember, a consolidation breakout is equal to or greater than. So there's no reason to think that we can't see the S&P 500 make its way to the October lows out here and take them out and get all the way down to the bottom of its price channel. Now, I can't tell you where that's going to be because from a time standpoint, I'm not that smart. I'm not even close to that smart to figure out where. But as should price move down to that level, we'll know when and where to be looking for that. So we've got that exact same pattern in 3 of the 4 out there, and certainly something for us to take a look at. Now, probably the tell here with regard to the markets, when you break through through resistance, oftentimes, not always, but oftentimes you'll come back and test it. Well, in the case of a descending price channel, the test would be coming back like the Dow, once you've broken out, is coming back, testing it, and see if you hold. Well, right now, this week, I'm not saying this is where the Dow gets to, but it could. 32,882 or thereabouts. Next week, it's probably about 32,800 or thereabouts. So that's something that we'll want to keep an eye on as well. So we know that at this moment in time, we've got consolidation, measured move breakouts for each of the U.S. equity futures that we're taking a look at. These are the cash indices. We know that they are still inside their bearish descending trend channels out there. And we could see, because price is now rejected the top, we could see price get all the way back to the bottom. So what do we do from here, Stevie? Good question. Well, we change screens. And we're going to go over and take a look at our multi-panel ES mini chart out here. We're not going to focus on the daily because we've, to a certain extent, have done that. If we take a look at a 5-hour time frame chart, we can see an A to B equals CD pattern to the downside. So we can draw that in, and we will draw that in as soon as I find the right. Here's the A to B. Shoot, I hate to do that. So because the B point out here is the low from the session at 5 o'clock last night, I have to also use the high of that candle. I hate using the high of that candle, but I hate using the same candle for both the B and the C point. Nonetheless, that's what we've got to do out here. So this is suggesting a 1-to-1 measured move, A to B equals CD, that is, in the 3,900 area. That's the 5-hour chart. We'd have the same pattern inside the 4-hour chart. That really the exact same pattern. Price below a TD9 count breakout level at 39.69. That suggests lower price, no bottom signal. Same for the 120. The 16-minute time frame chart is negating a TD9 count pattern as we speak. Now, we're only 14 minutes into the hour. But you negate that, that tells you about a strong momentum move to the downside. Let me sum it up in 5 seconds for you. Stevie doesn't see any kind of bottom signal here for any of the time frames that we follow inside the ES Mini. That says lower prices coming at us. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Thanks to our technical team. We're back up and running like normal out there, so apologize for that initial interruption that we had out there. My fault, I'm sure. We got the Dow, all the U.S. indices trading to the downside. Same with the sectors inside the S&P 500. Let's go to our first question out here. First question coming from Alton, who wants to take a look at natural gas. We've got our 8-panel set of charts up here for natural gas. If we take a look at the daily time, the monthly time frame, I should say, and I've got a continuous contract up here, but we just have simply price consolidating with inside its monthly profile, but finding resistance over the course of the last quarter at its green oscillator and change line. That's currently printing at the 709. Nope, I take that back. That is printing at $7.09. Weekly time frame chart still has a TD9 count bottom, but price is also ultimately been deflected by its green oscillator and change line. That's at 705. So we know that a key area of resistance is held out there on the daily. The monthly and the weekly. Daily time frame chart out here, I don't really have a bottom pattern. That doesn't mean it didn't bottom. I just don't have a bottom pattern. In fact, we've seen price trading above the top of its weekly profile for the last 4 trading sessions. That includes today. So Alton, as long as price remains above the top of that profile at $6.37, well, this is the January contract. We are rolling over into February. It's okay to still use January today. I'll flip that over, and maybe we can take a look at that tomorrow. I'll be recording the show between 8 and 9 tomorrow. But right now, natural gas still is bullish. On the January contract, price should be targeting $7.42. Now, we say that as long as price remains above the top of its daily profile. If price gets back below that, it would also dip below red oscillator and change line, Alton, and those would be bearish conditions. Now, what I mean by bearish conditions is that price should then go back and test support. Where's support? Well, it's a bullish structured profile, which is between 554 and 575 out there. So that's really what's going on. Now, if we take a look at the intraday charts out here, look for some signals. I don't really have a ton. I have a 4-hour Rhodes Momentum Indicator top. Price moves lower. I've got a Rhodes Momentum Indicator top on the 5-hour chart. No bottom signal here. Price in both the 4-hour and the 5-hour is trading below support. which is both the oscillator and change line as well as the bottom of their profiles. That could be suggesting lower price. The lower price area then that I would be looking to is the 2-hour time frame market profile. That's at $6.37. So on a further retracement, on a further pullback, you'd be looking for 637 to hold. Of course, you're still looking for 637 to hold, which is the top of that daily profile as well. So Alton, I hope that helps you out with regard to natural gas. Thanks so much for taking the time to write in, and have a terrific Thursday. Tim writes in, and Tim wants to take a look at Apple. So if you give me a moment, we'll get over to our 3-panel charts out here. We'll get the, there we go. Well, we got Apple right up there. How about that? That was a wonderful thing. So what did Tim want to look at? That's a great question. I was multitasking, and I screwed that up. Let me see if I can find his question out here. Tim, Apple Radio Show. Please take a look at when to take a bite out of Apple and go short on the daily and weekly. Or if it forms bottom, I'll take a long. Okay. Well, so what do we know about Apple right now? So we look at these charts here. What we know is price is trading below both its red oscillator and change line and the bottom of its daily profile, and it's trading into an area where it had previously bottomed. That was the October 13th bullish engulfing Rhodes momentum indicator pattern that had volume there of 113 million. Price got down into that level and tested it back on the 14th with 140 million. So 140 was going into 113, still didn't bust it out. In fact, price traded higher. Today, so far in the first 2 hours of trading, you're pulling back with about 30 million, 30 times 3, so you're about 100 million shares, basically, give or take. Price is pulling back with lighter volume than when it made that swing low on November 4th, and lighter volume than when it made that swing low on October 13th. So because price is pulling back, at least at this moment here, Tim, with regard to Apple on lighter price, it may find support in the 137.36 area. That's the bottom of its weekly profile out there. So maybe now is not the time to take that bite out of Apple, as you say. It's not a time to go long Apple either. Let's take a look at a 30-minute time frame chart. On a 30-minute basis, this top with the TD9 count was bar number 8. That was at 10 o'clock. That was a couple of days ago on the 13th. Now you've got an A to B equals CD to the downside. This had formed a hammer candle out here at 10:30 this morning. Tim, if price closes below the low of that hammer candle, which is 137.85, do remember it's a 30-minute chart that we're looking at. But if price does close below that, that suggests lower price out there. Now this bar that we've got in here right now, that clearly, that's not, I've got a bad tick or something inside that. At least I believe I do. Pretty sure I do. Let me just try to reload all my historical data here just to make sure I'm giving Tim the correct information. Yeah, so okay, so you got the perfect, we've got to reload it. So there was no hammer candle, my apology. Glad that I reloaded it. So you've got the A to B equals CD pattern to the downside. So on a 30-minute basis, Tim, if Apple is able to produce a bullish reversal candle, what that would signal to us is at least a counter trend move for Apple with a price target of its oscillator change line. That's currently printed at 141.69. Let me switch over to the black background charts as well. It's just going to be easier for me to see the volume aspect. You're not going to see the black background Apple charts just as soon as I switch over. I've got to switch window panes. So we'll do that here. AAPL. So we're Thursday. Oh, that's good. AAPL. So we're Thursday. We got about a day and a half left of trading. The last time the price was down here, the week that began October 31st, 510 million. Boy, we're going to be really light. Yeah, so Tim, Apple is pulling back with light volume. It doesn't mean it can't bust out the lows or anything. But, you know, your specific question is you'd like to go short. Price is pulling back to an area of support, potential area of support. Again, the bottom of that weekly profile. And while doing that, it's doing it on lightish type volume out there. So I hope that helps you out. And I can also see a rising trend line. Might be able to get that squeezed in here on the daily chart. If you give me a moment, let me see if I've got my trend line tools out there. Just makes it easier for me to not have to draw it in. There we go. That should put it in there. So there's your rising trend lines on the daily and descending trend line on the daily time frame as well. That could be another area of support. Tim, that's at about the 135 and change level out there. It shows 135.91 on my screen. So I hope that answers your question. Thanks much for taking the time to right in. And remember, on a 30-minute basis, you've got a A to B equals CD pattern to the downside. A bullish reversal candle would at least confirm a short-term bottom inside of Apple. No other questions at this moment in time. Let me just check real quickly here inside the Tiger's Den. I don't see anything inside the Tiger's Den as well. I would love some requests, though. Absolutely. Hey, I think I'm on the other side of this nasty cold or flu or who knows what it was. It started last week. In fact, started last Thursday morning at about 6 o'clock in the morning. That was about 16 hours of hell. That's for sure. But now I'm totally on the mend. It probably doesn't sound as such, although it's got to sound a whole lot better than it did a couple of days ago when I was on the air out here. In any event, Dow's down 761, S&P's off 98. Would love to field your questions. Steve at TFNN.com or anything inside the Tiger's Den. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We've got a couple requests. Thank you for the folks inside the Tiger's Den for giving me those requests. That is much helpful. And we're going to take a look at the ticker symbol ELF, which is ELF Beauty Inc. And it's a beauty of a stock chart, although it's struggling right now here, Rich, with TD9 count tops for both the daily and the weekly time frame. So it's very clear that a price can take those levels out. That level is really the same for both. Is going to be the high from the week of December 2nd, which is 56.93. A close about 56.93, then this thing will negate those topping patterns. You're back off to the races out there. You have both a TD9 count and a Rhodes Momentum Indicator top on the daily time frame. Now, that pattern took place back on November 28th. It's December 15th. And what that's led to out here, Rich, is nothing more than a sideways little consolidation, but very much like the stock market out here as well. So that's what you've got. Your real support level is between 49.69 and 50.93. That's the bottom of its profile and its TD9 count breakout level. 51.66 is the weekly level of support. That's its green oscillator and change line. The monthly chart looks muy bueno. No topping pattern at all at this stage of the game. So everything looks pretty good. Let's see what's going on with regard to ELF. Kind of apropos. Today is what, the 15th? So we got 10 more days till Christmas out there. And if we take a look at the 30-minute chart, well, I tell you one thing is for sure. ELF loves the TD9 counts out here. So, Rich, you hopefully you know that pattern. If not, learn it. Just subscribe to Mastering Probability. If you do it for 29 days, costs you nothing. You'll get an education of a lifetime out there. You can see it top with the TD9 count as well as the Rhodes Momentum Indicator top. Price right now is below its profile levels. I would say if it closes below this hammer low that took place at 2:30 yesterday at 55.19, that's going to suggest a further move lower. That further move lower could take you to its breakout level, which is down at 53.89. So that's what we can see. We take a look at ticker symbol ELF. I love that movie. Not my favorite Christmas movie, but that movie ELF is that's a good one. That's a funny one. The next question coming in from G Motion. G Motion wants to take a look at Chevron. CVX is the ticker symbol, both Chevron and Tesla. Now, Tesla we know is an A to B equals CD to the downside. But we're going to go ahead and take a look at that stock chart as well. So now we take a look at CVX. What do we know? Wave number 7, Rhodes and a Rhodes Momentum Indicator top out there. That took place on November 14th. Now we've got an A to B equals CD to the downside. That was confirmed with a gap to the upside, that by the D point on December 13th. Now, price, in theory, in practice, really, if price today closes below 170.52, it negates that by the D point buy signal because it was this gap to the upside. So price closes below support. In this case here, support would be the top of that gap in essence. And again, that's the high from December 12th, and that was at 170.52. So if price closes below that, which right now looks like that is a real possibility, then that's going to suggest lower price. Now, in a daily time frame, CVX G Motion could be targeting 156.35. Once you close below one breakout level, which was at 175.17, you may go to the next. That's at 156.35. But before that would happen, price is going to have to bust through the support level of its weekly time frame. The weekly time frame shows a Rhodes Momentum Indicator signal, but no bearish reversal candle yet. Price is above the top of its profile on a weekly basis, 166.83. So, if price were to close below 166.83 tomorrow, G Motion, that's a pretty good indication that we're headed lower. The headed lower here would be between 151 and 156. Well, we know 156, we've got a daily breakout level. I would say that would be the message of the charts with a close below 166.83. Does that make sense? Hopefully it does, as we just simply, go through the daily time frame, then look at the weekly time frame on a monthly basis. The level of support is at 161.75 or thereabouts. If price moves lower, well, then we see that line will move lower as well out there. So we've got signals suggesting 166.83 is the next key area out there. Below that, 161.73, and if price gets to below that, then we're looking at the 156 level. Now, on an intraday basis, G Motion, what Chevron is doing is forming a TD9 count bottom. It will confirm that bottom at noon. It will complete that bottom at 12:30. What's the difference? A confirmation says that now, in this case here, it's a bottom, that we do have a low that has formed on either bar 8 or 9. Well, the low can form on the bar following bar number 9. That's the difference between a confirmed pattern and then the completed pattern. So we should see a bounce inside of Chevron begin between 12 and 12:30. If it doesn't, and price takes out that low, whatever that low is, I don't know what it will be, then that's telling you about a strong momentum move to the downside. Does that make sense, G Motion? He says, yeah, it makes sense. Perfect. Okay, so that's CVX for you. Let's go take a look at Tesla. Now, in the case of Tesla, I'm going to just, we'll stay on the white background screens. I will get my black background screen going because I can give you the exact A to B equals CD pattern to the downside. And it's an A to B equals CD pattern on the weekly. It's been confirmed on the monthly. The monthly chart, volume was 1.9 million. Right now we're at 1.1, so it hasn't passed the B point with volume on a monthly. Doesn't matter. Tesla's headed to the 107.03 level. Stevie, can you guarantee that? No, I can't guarantee anything. You can see at the daily time frame. So on the weekly, that let me just try to squeeze this chart here a bit, pull it back, then you can at least see the A to B equals CD pattern. So here you can see that, and that's how we get, in essence, to the 107.03 level out here. Price is also negating a weekly TD9 count bottom. So it looks like it's going to do that this week. It'll do that this week with a close below 166.19. Another indication that Tesla wants to head lower. Now, on a daily basis, G-Motion, if we did get a bullish reversal candle, then you would expect or anticipate a counter trend move. That first counter trend move, the oscillator and change line, 161.80. The second counter trend area would be between 172.05 and 175.03. If price were able to get above that, then you'd be looking at a move to the 186.98 area. So what we've got here at Tesla, A to B equals CD to the downside. That's been confirmed both on the daily, well, it's not confirmed, it's on the weekly chart out here. The monthly's got the same pattern, just hasn't been confirmed on volume. The daily says if you get a bullish reversal candle, you can get a little bit of a counter trend move out here. You've got a, nothing here I can really help you with. You've got to confirm Rhodes momentum indicator bottom on a 30-minute chart. What price is going to need to do is close above 162.32 to suggest that there's any kind of further counter trend move. So Tesla, longer term, headed to the 107 level. Probably a reason, I would imagine, that Elon listens into the show, and probably a reason that he went ahead and sold some additional stock, saying, hey, I better sell before it gets down to Stevie's 107. Of course, it's not mine. That's the A to B equals CD pattern to the downside. So I hope that helps you out. Thanks so much for the request, Coder. This crud going around in New Jersey. So 2 weeks ago, when I wasn't with you, that was on Thursday and Friday, was because I was going to a wedding that was supposed to have happened 3 years ago in New York City. And it got canceled 2 different times because of COVID. They were able to pull it off the Saturday before. About 180 people over at the Yale Club. Great place to hang out, and kind of tight quarters. And I just found out in the last couple of days that apparently was a super spreader event. All kinds of people coming down with the flu, and I mean all kinds of people. The flu, COVID, the whole bit. So I kind of am hopeful or feel like I've gotten out of it pretty easy out there. In any event, Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the Dow down 782, S&P's up 101, NASDAQ 100 down 370. We've got a couple of requests, so let's get to those. First one coming in from Zeus inside the Tiger's Den. Wants to take a look at that ticker symbol JEPI. That is a JP Morgan. I hope I've got it right for you. That's a JP Morgan Equity Premium Income Fund. And the question is, he'd like to go, this is in his IRA or her IRA, my apology. So what we've got out here with regard to the JP Morgan Equity Premium Income Fund is a little gap to the downside today. That falling window is confirming a Rhodes Momentum Indicator top. Price is below the bottom of its daily profile, which is 55.89. The prior swing point that it's dealing with was from the trading session of December 6th. Volume there was 3.5 million. You're at 2.1 million as we speak. This looks like that where you might be able to pick this up is its breakout level. That's where it looks to me like it's targeting, and that's in the 53.84 level. 54.11 could be a target point inside the weekly chart out there. No topping pattern that I have in place out there, but price is back inside a brand new weekly profile. It's bearish and structured, and so tomorrow's close, if it does close below 55.72, really brings 52.56 into play. So you got 52.56 to look at, 53.84 to look at as your, I would say, your area to add to a long position. What could get in the way of that? Excellent question. Right now on a 30-minute basis, a short-term time frame chart, you are in bar number 9 of a TD9 count. That says that pattern completes at 12 noon, and it confirms at 12 noon and completes at 12:30. So you should expect and anticipate some type of a bounce. Now, profiles are way up top, 56.19. The oscillator changed on to 55.87. So now here's the deal, though. If the low of the day, whatever that is, between now and let's say 12:30, right now the low of the day is 55.23. But if the low of the day gets taken out of this TD9 count, that's going to tell you about a strong momentum move, Zeus, to the downside, and just simply confirm what you and I just looked at with regard to the daily and the weekly charts out there. So I hope that helps you out. Thanks so much for the request out there. Let's go to our next question that came in. The next question is from, oops, I got to get to the right chart. Next question is coming in from Ray in Sarasota, who wants to take a look at Yamana Gold. And his question is Yamana going to pull back to the $5 area out here? Well, now when we take a look at Yamana Gold, you know, I see the A to B equals CD to the upside. What I'm let me make sure that this has completed. So let's go to A to B, and we'll just drag that over to the. Geez, now I got to use that same candle, both for the B point and the C point out there. But sometimes you got to do what you got to do. So now we take a look at this. That didn't confirm an A to B. Well, nah, it really didn't. Okay, so I don't have a confirmed topping pattern per se, Ray, out there. What we do have is with regard to Yamana Gold, again, the ticker symbol there is AUY. Price is testing support, old resistance. That would be the top of its daily profile. So the first level for you to watch is the top of that profile, which is $5.42. If price is able to close below that level, then it brings the other profile areas into play, 530 and 518. If price should close below 518, then you'll see your $5 even Steven level out there. But that's what you'll have to do one step at a time. Right now, I would say that you just have a sideways consolidation out here. And that would change to something different if you get it closed back inside that profile again. That's below 542. Now, on a 30-minute time frame, appears that we have a lot of this on a 30-minute time frame. For you amount of gold, a TD9 count pattern that has now completed. The bar following bar number 9, that was the bar that completed 11:30. So Ray, if you see a close on a 30-minute base below 542, the amount of gold is headed lower. Now, this formed a TD9 count on a 30-minute basis at the same place it did at 11 o'clock on December the 12th. So December 15th and December 12th, you've got TD9 count bottoms at approximately the same dollar area. What price should do from here is bounce. Bounce to where? Around 552. But again, if price closes below 542 on a 30-minute time frame, it then is likely telling us that price is in fact going to close below the bottom of it or the top of that daily profile. And that's going to bring your 530, 518 into play. So Ray, I hope that helps you out. Good to hear from you. And thanks so much for taking the time to write in. Nicholas, thank you for resending your email message. I did overlook the first one, but you were kind enough to send me a second one. And what Nicholas wants to look at is IBM. And he's looking for an entry point as well. In the case of IBM, what we've got right now is a potential consolidation with inside its daily profile. And that is between the range of 143.69 to 149.61. Is 143.69 a buy point out here? It's possible. So I say it's possible. But then, in order for that possibility to really exist, you'd love to see some type of bottom pattern on an intraday. Now, for our purposes, I'm just using a 30-minute time frame. The 30-minute time frame negated a TD9 count bottom at 11:30, so 18 minutes ago. So IBM is telling us right now, at least on a 30-minute basis, it has strong momentum move to the downside, and it wants to continue to move lower. Well, where's that lower? Pretty easy. That is the bottom of that profile, 143.69. Since we don't have a bottom pattern, that's tying out right now at this stage here, Nicholas, to that 143.69 level. Now, maybe it does when we get there. I won't be on the air at this stage here. That, to me, would not be the buy area. So the buy area inside of IBM could be 136.51. That's its TD9 count breakout level. Turns out you've got a brand new weekly profile that is formed. And support there is at 141.75. Oscillator and change line is below that. So I would say more likely than not, price is going to go target 143.69. If it takes that level out, we're likely going to see a move into the 136.51 to 141.75 area. We take a look at IBM. What we can see on a monthly basis, what IBM did was it ran all the way up into TD9 count breakdown resistance at 151.63. So we've got all the indications that it does want to head lower out here. And so, Nicholas, I think you've got to wait until price starts to target those areas before we start taking a look at a potential entry point. So I hope that helps you out. And as always, thanks so much for taking the time to write in, especially in your case where you rewrote in because you just knew that Stevie had overlooked your request out there. Let's go take a look at our next request out here. This one coming in from the Golf Guy. He wants to take a look at DuPont, ticker symbol DD out there. Now, if we take a look at DuPont, it is consolidating with inside its daily profile. The range is between 64.26 and 72.24. We can see a Rhodes Momentum Indicator top that formed out here on November 28th. That's led to this sideways move out here. That's what we've got. If price is pulling back into a prior swing point, the swing point from November 17th, that had volume of 3.5 million shares. So far today, you've done 868. So you're pulling back even into that swing point with lighter volume. Not too bad. May just tell us about a sideways consolidation, Golf Guy, that is going on. Your question was, is this an A to B equals CD? I believe the question is an A to B equals CD to the downside. And the answer is it is not. Why is it not? Well, because we don't have a B to C leg really out here. So there's no A to B equals CD pattern. If anything, what you've got is some type of a consolidation that's going on. We take a look at the daily time frame. On a monthly time frame chart, what do we have out here? So I don't have a top, but we do have a new profile. That new profile's got resistance at 72.24 and support at 66.43. So I'd watch the 66.43 area. Thanks so much for writing in, golf guy. Steve Rhodes with TFNN. Right.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Sign up for Basil's live webinar, airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar, just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques, as well as answer questions live. Spots are limited, and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Welcome back, folks. So we get all the U.S. indices trading to the downside, all the sectors inside the S&P 500 trading to the downside. U.S. dollar index is up. Now I've got a 10-minute delay. It's up 747 ticks out there. If we take a look at the yen Q, we've got a couple minutes. If we take a look at the yen Q, we looked at the ES Mini. Not looking good here. Now, when I say not looking good, we've got basically 7 multi-time frame intraday charts out here. 5-hour, 4-hour, 2-hour, 1-hour, 30-minute, 15, and the 10-minute time frame charts. We're looking for kind of bottom signals out here. The only bottom signal on a 2-hour chart, price negated is negating its TD9 count. That's going to take place in 6 minutes out here. On a 2-hour time frame chart, that tells us about a strong momentum move to the downside. Now, there is an A to B equals CD pattern, and should a bullish reversal candle form, that would then generate a buy the D point pattern. But the 2-hour chart is saying things do not look promising. The 30-minute time frame may at this stage here, may go ahead and complete a TD9 count bottom. Now, bar number 8 is forming, but it's not the low of the pattern. So you still need to see further lows, but you could get, theoretically, a TD9 count bottom within the next 4 minutes out here. The pattern would not be confirmed until 12:30 and completed by 1 o'clock. Possibility, but man, that 2-hour chart is screaming, yeah, maybe not so fast today. You can see prices below the oscillator and change line just from an intraday 10-minute and 15-minute standpoint. 30-minute standpoint, that's a real key area of resistance. Let's put that resistance right now at about the 11,565 level out there. So I can't really put my U.S. dollar index chart. I've got to change data feeds out there, and I can't do that in the next 15 seconds. What I can do is switch back over to the black background charts, go to our market update, extend out the here again, this is the March contract that we're looking at for the U.S. dollar index. The A to B equals CD pattern, that's easy to see. You don't see the Rhodes momentum indicator signal because I don't have that programmed here on my e-signal system. But if you do get a bullish reversal candle, right now you most certainly have that. You've got a key reversal bar as well as a bullish engulfing candle. And the only thing that U.S. dollar index really needs to do is close today back above 104.23, and that's going to suggest a further run higher. That should then mean a further run lower in the equity markets. Folks, thanks so much for joining me today. Please join me early tomorrow morning between 8 and 9 as we record the show, the Trader's Edge Show then. Have a terrific Thursday.